The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're going to have Stan Harley as our guest today. He's now a resident of Arizona, so hopefully we'll be able to have him on a regular basis. As you know, Stan is in the, I don't know what his ranking is now, but as of a couple months ago, he was number 2 in Timer Digest for stocks, so we'll have him on at the break. The first part of our show today is going to be in honor of my very, very dear friend who was today was his birthday, Mark Douglas. And Mark and I have been friends for many, many years, and it's been a couple of years now since he passed away, but still miss him every day. When I moved to Arizona here in 1994, he and Paula would come out and visit me so often that after 2 years, they decided to move here. They moved about a half a mile away, and Mark used my office, my extra office, as his office, and so we worked together for well over 3 years as he was writing the book, Trading in the Zone. So I had firsthand experience because a lot of the people that he interviewed for that book would, of course, be here visiting him and also me, and we really had an enjoyable arrangement. Folks, I have to really make a really strong pitch here for the mental part of trading. I mean, Mark drilled this into me year after year, and believe me, when you got a hard head like I do, it really takes a lot of drilling. But he would just reiterate all the time how important it was, to do the mental part of trading. And of course, his main focus, of course, were the 4 fears that really keep us, shackled to these markets. The fear of being wrong, which you're going to be wrong a lot. The fear of losing money, yep, you're going to lose some money. The fear of missing out, yes, you're going to miss out. And then the fear of leaving the money on the table. Folks, the fear of leaving on the money table is the least of your worries. If you don't leave the money on the table, that means you're getting the absolute low tick on your buys and the high tick on your sells. And the only one that gets that is God, and she doesn't trade that often. So just remember that those 4 fears, keep in mind that the fear of being wrong, trading is like breathing. You're going to be wrong a lot. The thing is, the faster you realize you're wrong, the better off you're going to be. The fear of losing money, yes, there are going to be times that you're going to be losing money, but that's neither here nor there. You have to get over that. That's really, what you're doing. But what happens is after you've lost 3 or 4 times, it reinforces the fact that you're losing, and then you can't get back on the right track. And that's why you have to have that mental framework that's built on absolute trust. And that's the main thing that, it's really important. Mark used to say that fear causes us to focus our attention on the things that are wrong. And so we create an experience, that makes us afraid of doing the right thing. And that's pretty much what it is, because fear, the immobility and distortion related to fear is what really causes it. So when I was in California before I moved here in 1985, I got involved with, it was in 1986, I got involved with Tony Robbins. He was just getting started. And I really locked into neuro-linguistic programming because, once they got you to walk on fire, that was a pretty amazing thing to do. But it showed you how your mind could actually, help. And I had been involved with W. Clement Stone and Napoleon Hill back in my days in Indiana because they were from Chicago and we were from Indiana. And so I would go up there, and I've actually had lunch with Napoleon Hill and W. Clement Stone. And that was really a great experience. We actually wrote him a letter, and he called us, and we got to go up. So it was really cool. But remember, that's the main thing that we're trying to focus on when we're doing this, is to get over the fear aspect of this. Tony Robbins has a great acronym for fear. That means FEAR, means false evidence appearing real. And to me, that is the main thing. If you stop and think of it, folks, almost 95% of all your fears are never realized. They're just not. And one of the things that Tony Robbins used to do is that if you had a fear of spiders or a fear of snakes, he would bring a spider or a snake out and try to, get you to do it. And of course, he was very good at hypnotizing, and he was able to do that. And when people realized that they were actually involved with a snake after they had regained consciousness, it was really surprising that those things really happen. So remember, your fears almost never come true. I mean, that's pretty much the whole thing of what you're looking at. So just keep in mind that you're responsible. You have to take the responsibility for your trade. You've got to get used to losing, because it's just like breathing. You just have to keep going. Like one of my favorite books, child books, that I give to anyone who has a young child is, oh my gosh, I've lost the name of it. Can you believe that? yes, I can believe it. But anyway, I'll remember it in just a minute, and we'll keep going. And Dr. Seuss, and the book is The Places You'll Go. And it's basically, how you think about how you become, and that's really what it's all about. So if you got a youngster that's 6 or 7 years old, get them the book by Dr. Seuss, The Places You'll Go, because it opens their minds that boys and girls can do just about anything, and that's the whole key to looking at it. Now, the first chart that I posted in here today, different than the DAX, because I didn't have access to the DAX last night, so I wanted to bring up the Nasdaq chart. As you'll notice here, we're banging against this other high again that we made yesterday at the 59.12 level. That usually we're trading at 59.10 right now. The ABCD structure on this could take you to 50 to 59.30. But folks, that's not the important ones. The important ones that are happening are in that bond market. If you recall, when we were talking about the bonds yesterday, that it looked like this is actually Monday's show. Here we are on Wednesday, but let's just put up the one from Monday, because we're now 2 handles below this level. You were trading Monday here at 155.01. The high was 155.04. The exact 382 level was 155.08. We're now trading at 153, and that's just about ready to give up the ghost. So that takes you down to to 150. Below 151. Folks, interest rates are going higher. They're not going lower. I hope you realize that by looking at some of these charts. So that's the key to this, is the fact that the dollar is actually getting much stronger. And the reason for that is interest rates are going higher. Well, we're going to bring that euro chart up, because we hit that. If you were looking yesterday at the euro, we were looking for the euro to come in to make this one second here. I got to move this out of the way here, and then I'll be okay. Hold on. It's a little technical difficulty. We were looking for it to make that 157.55. We hit that. We went to 157.54. We rallied all the way up to 158.15, and then that's it. It gave up the ghost, and it's not helping gold. We'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've had a question from one of our listeners about the foreign exchange markets and how they're related to the U.S. dollar. Folks, the U.S. dollar, when it is really strong, it means that people want access to dollars. The reason why they want dollars now is because our interest rates are moving higher. So money flows to the place where they can get the best interest rate, usually, not counting quantitative easing, of course. But since interest rates are breaking down, like we talked about earlier, this means that people from foreign countries need dollars to buy the Treasury notes and Treasury bonds. That makes them, more valuable because they're getting more, more interest on these things. So that's the way it's supposed to work. But there's a lot of factors in between foreign exchange that make it a little bit different. Anyway, just remember that there's a lot of factors out there, and that's why you look at the charts and try not to think about, well, I don't think about the fundamentals because it's over my pay grade, but that's really what we want to do. Now, I wanted to focus here on this chart from Business Insider. It's about the number one stock pretty much in the world, which is Amazon, followed closely by Apple. You'll notice that it's a head and shoulders pattern. That's what they put it up as, but what I'd like to do is to put the head and shoulders pattern the way we look at it using pattern recognition. And the key to the head and shoulders pattern here, if you'll notice the two shoulders, when the right shoulder, the one that we just completed, is lower than the left shoulder, that's an extremely bearish scenario. And when you look at the Amazon chart, you'll see that it had a beautiful ABCD structure up there at 1,000. And that was exactly at a 382 level from the high that it made at 1,080. So that tells us that, that looks like Amazon is heading down towards 865. That's the bottom line of what you're looking at when you're watching a head and shoulders pattern. So that's the whole key to that one. Now, if you recall, a couple of weeks ago, I did a special stock presentation here about the bearish aspects of Apple, the fact that it was making these long-term three-drive patterns going back 10 years, and they were both perfect 1.618s. It was trading at 165. We're now trading at about 155 after being as low as 150, and all I wanted to do is to show you where we are now with Apple over the last few days, because we talked about this 2 days ago. on Monday when it made a 1.618 expansion down there at 149 and change. We're expecting the rally to get up here to near the 155 level, which would be a 382 retracement, and I think that would be a spot to really take a look at Apple from the short side. I know the fundamentals on Apple cannot get any more bullish. They've got $27 trillion wherever it is in some foreign bank over in some foreign country, probably Montevideo or someplace like that. But that doesn't really make any difference, because when it's over, and that long-term chart on Apple tells you that it's pretty much over. I don't know if there's going to be a competitor or coming out with another iPhone, or the iPhone 8 is not going to do as well as expected. And how could it not be when it's only $1,000? It's not a big deal. For most people, anyway. Anyway, that's what we're watching here in the Apple. It just looks like it's ready, to take a flying Melinda to the downside. The other one that looks really bad now, folks, it looks as bad as the bonds, and that is the gold market. We had a beautiful chance, as you recall, in the gold when we had the big run-up yesterday, when it rallied to $17 up to that actually dropped $26 up to the 12, 13, 18 level. That was an exact 382, and since that time, it is taking a real header. And now we've broken down. Let's just bring this up to show you what you're looking at here, because we've broken down below the low that was very important, and that was the harmonic number. So we got down to 1291. We rallied up to 1316, and then that was a perfect 382 retracement from the high that we made back on September 8th. Boys and girls, we're trading at 1286 now. That sets up an ABCD structure that's going to take it all the way down to the 1250 level. And it looks like it's going to do it rather quickly. So I wouldn't want to be long gold in here. I mean, it had a chance, and it gave up the ghost. So I don't see any pattern here that would make gold very bullish. Now, if gold were to turn around today from this level and then get above the 1317 level, then I'd have to change my mind. But until that happens, that looks like it certainly wants to move to the downside. Just to give you an example here how weak it really is, just take a look at the silver market. This is an hourly chart in silver looking over the same time frame, and you'll notice that back in September it made that big ABCD pattern, went right up to 1830. That was the high. And since that time, we were down about $1.50, $7,500 per contract. But the key here is, if you look what happened on Sunday, we had this very, very weak rally that couldn't even make a 382 retracement. It barely made the ABCD swing, and now we're breaking down below that. And here again, that tells us that we're looking at something in the neighborhood of $15.25 per ounce in silver on this. So that is not a very good. That is not a very good sign, in my opinion. Another one, since we're talking about the metals here, if we'll take a look at the copper, the red metal. Here, Steve's got some information about the majority of Apple's cash is in U.S. Treasuries, CDs. But why do they say that it's overseas, Steve? That's all there's a good example, Steve. You probably know more about this than I do. But they say that most of that stuff is overseas. Oh, they could hold that stuff overseas. That's all it is. Yeah, that is overseas. Yeah, that's all it is. They're just taking it over there. Well, if they ever brought that back, that would be a boom right there. Let's take a look at copper here, folks. We've been down for just about a month now in copper. We're due for a rally. I'm looking for a 382 rally in copper to get short. We completed that big ABCD pattern over the last 18 months. Copper's in a bear market, as near as I can tell. It doesn't even have a dead cat bounce. Ever since we topped a month ago, the biggest rally we've had has been 4 cents. So that's not a very good sign for copper. So watch that. In just a few minutes, we're going to have Stan Harley on at the break, and he's going to be talking to us about his cycle stuff, which is really exemplary and which will be a lot of fun. And since he's living here in Arizona now, I hope to get to visit him like we did back in the old days. The dollar index, let's just look at it here for just a second here, because this is not up to date because I didn't get the stuff in from last night, but we're now trading above the we're almost at 94. We're trading at 93, almost 94 in the dollar index. You'll notice that it hit that 50% retracement from 2014, and it hit that 38% retracement from 2011. And 2011, of course, was when our leader, Tom O'Brien, coined the term King Dollar, and it has been the king. And folks, this could be another leg, and if it is, it's going to be a big one. Remember, about 12, no, it's more than that. My grandson is 16 now, so it was about 16 years ago that we had that dollar up around that 160 level. That's when the euro was down around 80. So we could easily have a heck of a rally in this, taking it to 120 in the dollar. Boy, if you want to start thinking about foreign vacations, that's what you want to do. 877-927-6648. Stay tuned for Stan Harley.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley as our guest this morning. Stan, are you there?
Good morning, Larry.
Good morning and welcome to sunny Arizona. How does it feel to be a cowboy now?
Hey, it feels awesome.
Yeah, this is the most beautiful time of the year because, the hot weather's pretty much gone and the monsoons are gone. So this is really a spectacular time, to
It's
be
perfect,
in
yeah.
Arizona. So I'll get up there and have lunch with you soon. So welcome, and I know you're going to enjoy it a lot. There's a lot of, financial guys up in that area. So once in a while we do get together, and we'll certainly include you, when we do get together, which is about every couple of months. Anyway, listen, the question that we have for you is we have our good friend Bill Meridian, who was the timer of the year last year. You finished third, and of course we had Bill on last week, and he was saying that he went from first to out of the business to out of the ranking because he was bearish, and when you're wrong, it knocks you off the top list, and we're all familiar with that. So how are you doing as far as the timing? Have you kept up to date of where you stand with that?
I can identify with what Bill says. I've been on top of the list,
yes.
and I've rotated in and out, so I know that quite well. Indeed,
Yeah.
it's.
But you're consistent, though. You're there every year. That's really a feather in your cap, my friend. That you should be very proud of that.
Well, thank you. Unfortunately, this business it never takes a vacation. Unlike human beings, we need to take a vacation or do some other things every now and then, but the market goes on day after day. So that's just life. That's how it is. But I think one thing you will note, Larry, is generally speaking, day after day, month after month, year after year, we tend to see the same population of names near the top of the list. And I think what that tells us is that market timing is an extremely, extremely difficult endeavor. And there are, of the many, many thousands of people in this business, there are just a handful that seem to get it right time in and time out.
What's really amazing?
Why that is, I'm sorry, go ahead.
No, I'm sorry to interrupt. Go ahead and finish up.
Well, I think it requires, my personal feeling is one has to use advanced technical analysis. It's something that's not well understood. It's not taught in the schools. I have an MBA from UCLA, but that was not taught in school at all, and quite the contrary. It was generally ridiculed in school, and I think what my experience at UCLA was probably fairly typical. So the people that tend to be among the top timers tend to be consistent. You tend to see the same names. They tend to be very good. That doesn't mean they're on the top of the list every single day or every week, but they tend to populate that list through thick and thin.
Stan, I got a question for you. How do you handle these 24/7 markets? I mean, back in the old days when we were trading in Southern California, we didn't have the S&P until 1982 and bonds 1976. And both bonds and gold opened at 6 o'clock in the morning, which was no trouble for us because we were early risers. But, at 12 o'clock, it was over. Now
Yes.
It's all night long all over the world. I mean, it's just never ending. I mean, it's just, 1 minute after the next minute, 24/7. That's a very hard thing to assimilate when you're doing this business. How do you handle it?
That's a good point, Larry. I do all my analysis based on the cash indices and use the futures market as trading vehicles. But for me, I just focus on the cash indices. For example, in the stock market, my primary proxy for analysis is the S&P 500 cash index, and that's the best we can do.
You do that after the close, then, and then look at it again in the morning.
I look at it during all working hours.
Well, that's what I was trying to get out of you. See, so you're still doing 24/7 like I am too. So you really can't get away from it because if you don't, you're going to miss some huge moves sometimes, because things can happen in Asia and Europe that will affect our markets. And if you wake up and see a price that's unchanged, it might have had a 2 or 3% move overnight, and you're not aware of it, and that affects the dynamics of the market. In my opinion, I don't know how you can get around it.
There's no way around that, Larry.
Yeah.
There really isn't.
Okay, why don't we quit listening to me and let's get on to what you have to say. I'll start you off with your September 26th stock market recap, and we'll go from there. How's that sound?
Oh, absolutely. The markets have had, had an extraordinary advance from the November election lows of last year. And if you back it up even further to the February of 2016 lows. And I think we've still got lots of bull market left. I think it's been eye-popping, but there's still plenty more bull market to go. My analysis says we probably got it about another 5.5 years of this before we finally hit a major top. In the near term, I think we're bumping up potential resistance levels, the 2,500 area based on the S&P Cash Index and the 22,500 area based on the Dow Industrials. I think are going to serve as a glass ceiling for the overall market in the near term. So look like we're going to open a little higher this morning, but I'm not looking for a extraordinary upside move from here. As I said, I think those two areas bases, those two major benchmark indices, are probably going to contain the market here for the near term. I'm looking for the market to essentially chop violently sideways.
Okay. Do you have you said 5 years possibly as a bull market. Do you have any upside projections with that as far as the S&P 500? Could it hit 2,800, 3,000? What do you think it could go to?
I've looked at two prior 93-year cycle tops. Those occurred in 1929 and 1835, and looked at those bases, the power of 10, and how far they got above the relative basis power of 10. If we were to advance to the 1835 peak, that would put us up about 24,000 bases the Dow. We're just about there. If we were to advance to the 1929 area, that got to 386. 386 is to 100 is X is to 10,000. X equals 38,600. So if we were to get up to the same magnitude that happened in 1929, that would suggest a Dow 38,600 in the first part of 2023. And Larry, I think that's where we're going. We're over halfway there now.
Yeah, well, we certainly are over halfway there, and it doesn't back off much. That's absolutely spot on. Well, I'll tell you what, we'll have you back on in 2023 to see. We're going to have you on a lot now that you live here. You can't hide from me, okay? But but you're looking at trading cycles too. So you're looking at the next buying opportunity. You could easily get a couple hundred points pullback in these things, and they can still be very, very bullish. And that's what your real forte is, looking at these shorter term cycles. Am I correct?
Yes.
Because you do look at those. I don't remember. I think it was 93 days, and then you had what was your nominal cycle? 19 days was one that you looked at, wasn't it? In the market, that's very popular.
Well, you and I talked about that 93-day cycle, and that has been quite dominant in the market going back several years.
Stan, we got to pay a few bills. We'll come back and finish up with the 93 days. Stan Harley, Stock Market Cycles.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Stan Harley of the Stan Harley Stock Market Letters, located in Arizona. Stan, we're showing this chart of the S&P 500 large cap, and you've got a red arrow there that you've marked there, just about at 2,500, showing 2496. This is what you were talking about before we went on the break. Is that part of that 93-day cycle that you're looking at?
No, it's not, Larry. What I've done here is I've looked at the market going back the last 2.5 years, beginning from the May 2015 high through the present time period, and I find that a number of the highs and lows during that time period correspond with major Fibonacci ratios. So if you start, you're tracking from the May 2015 high, carry it through today, the 0.618 ratio of that time period falls exactly on the November 4th low of last year. And when I look at Fibonacci ratios like this, I look for a preponderance of major Fib ratios lining up with major turning points. And if I get a relationship like that, it says to me that the potential for a turn is very high. And that's what I see developing right now. I'm looking for a high right in here.
Okay. Well, that's and then there's a question that someone in the Tiger Den asked this morning. Is there any chance that you could see a 20% sell-off in the stock market at any time and still be looking at a market that could go to, 38,000 in the Dow?
I don't see that right now because the timing of that just wouldn't fit the pattern. So for the intermediate term, you and I discussed, there's a cycle that averages about 33 weeks, and that's an accordion and expands and contracts. But over the long haul, it's right at 33 weeks, about 159 trading days. And if that cycle continues its rhythm, it's due once again right around the first week in January. So I'm looking for a low in early January. Of course, before we get to a low, we've got to have a high. And I think that's developing here in the near term. But the sell-off into the early January low, I don't think it'll be anything like 20%. We tend to get 20% drop downs about every 4 to 7 years. But no, we're just not in the time zone for anything that significant.
Okay, we have another question from one of our listeners, and that is, how do you use regression analysis to come up with these numbers?
Well, that's a good question. That's something I learned when I was in MBA school. When I'm looking at cycles or Fibonacci patterns, if I just take a a ruler or use the visual method, that works initially. But if I want to do some very detailed number crunching, I want to find the best fit to the pattern. And so what statisticians do to find the best fit to the pattern, there are a number of analytical techniques, but probably the best and the most commonly used is regression analysis. And what that does is it looks at a series of data and looks for where it falls above and below the line, and then finds the best fit from a least squares analysis. And that's exactly what I do here. I do a regression analysis, and then the calculations determine what the best fit of the data series is. And that helps me a lot, and it should help other traders doing the similar thing if they're doing that form of analysis.
Well, that certainly makes sense. Now, we have another personal question from someone in the den is, how many hours a day do you work at this?
Very good question. My day, because I'm on the West Coast and now I'm in Arizona, but usually starts around 6 a.m., just like yours does, Larry. And I typically work until the late afternoon. I try to get some exercise. I run about 3 to 3.5 miles every other day, and I usually do that in the late afternoon. But I tend to work a pretty full day. 10 to 12 hours is probably fairly typical for me.
Wow. Well, that's a pretty good day. I like that part about the exercise on the 3 miles because I do that same thing. I'm exactly 3 miles from the Taco Bell to the north, Pizza Hut to the south, and Burger King is exactly north of me by 3 miles. So it works out really good for the triathlon that I try to do, for the Ironman competition each year. So.
Oh wow! I didn't
Anyway.
know you did that, Larry. Wow, that's awesome.
Yeah, right. I don't know if you knew this or not, but I have a gold Olympic medal from 1960 Olympics. I was in the knife and fork division. Stan, I have another question for one of our listeners here. Is asking a question about the Treasury bond market. Last time you were on, you were relatively friendly to Treasury bonds, or selling off a bit here. Do you still feel that Treasury bonds are going to be a good thing longer term?
Longer term, absolutely, I believe that, yes. If you look at a chart of let's say the TLT, which is a good proxy for the Treasury bond market, and put that on top of the S&P cash index, just going back the last year or so, one finds that while the magnitudes are not exactly the same, the inflection points are very, very similar. That is to say, the highs and the lows tend to reverse. A high in bonds tends to correspond with a low in stocks, and a low in stocks tend to correspond with a high in bonds, as a general statement. But for my broader picture, no, I think bonds are going to head higher, and I like the TLT as a proxy for the bonds. Yeah, we're backing off a little bit right now, but longer term, I think bonds are going to head substantially higher.
That makes good sense, and it's certainly good given the fact what the dollar is doing. It makes it pretty easy for some of these folks to move their money around. Stan, I have one other question for one of our listeners because you're very popular here. They want to know all about you. Do you do any work in foreign exchange, like the euro or the Canadian dollar or Australian dollar?
No, Larry, I don't. Not that those aren't good markets to analyze and trade. Just there's so many hours in the day. It's not something I look at.
Sure. Now, the other question that seems a two-part question is, do you do anything, your work is exemplary in the U.S. stock market, do you do anything with the German DAX or the Nikkei or the Hang Seng Index from Hong Kong?
I don't do the detailed analysis of those markets, but what I do is, Larry, I look at the UK FTSE, the German DAX, and the French CAC 40. With respect to the American markets. And as a general rule, they tend to move up and down with our markets. The one market to really, really focus on is the United Kingdom FTSE 100 index. That tends to make its highs and lows in lockstep with the U.S. Dow and the S&P. And when there are divergences, it pays to take notice. And right now, the FTSE is lagging our markets. The FTSE tends to either top out or bottom out ahead of our markets. And that's a very, very good divergence to monitor.
Uh-huh. Well, that's because I go to Europe quite a bit. Well, more often than I'd like. Well, I like Europe anyway. But when you get over there, the style of trading that they do there is certainly different than ours. They don't do that 24-hour stuff. They have set hours, and it's really a different type of trading environment when you go to Europe than what you have in the United States. I guess we've been weaned on this 24-hour stuff for the last 15 years, so I guess we've got accustomed to it. So. Anyway, that's a good point to ask. Now, we have one other question from one of our listeners, and that's about the gold. Oh, we got to take a break. Can you stay with us, Stan, for just a few more minutes? Thank you. We can pay a few bills. Stan Harley, Stock Market Letter.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Stan Harley of the Stan Harley Stock Market Letter. Stan, we have a question, from two different people, but I'll put it together. What is your feeling on the oil market? And also, do you have a feeling on the gold and also agricultural commodities? Do you have any idea of agricultural, or how do you feel about oil?
Can't speak to agricultural, but oil and gold I do have some opinions on. I think the oil market is in a broader downtrend, and it's not going to bottom for about another year. In the very short term, we're looking at perhaps some near-term buoyancy. If one looks at the weekly chart, one can see the 50-week moving average is pretty much flatline. The 200-week is still coming down. So any pop right now to the upside, I think, is going to be contained by the 200-week, but it's in a general downtrend. And doing a regression analysis of data going back to 1958, I've looked at the low in 1966, the low in 1986, and the high in 1998. And when I put all that into my regression modeling, the calculations suggest we're going to hit a major bottom in November 2018, which is just a little over a year from now.
Yeah,
with respect to the gold market, oh, I'm sorry, go ahead.
No, go ahead. Finish the gold. That's okay. Not a problem.
With respect to the gold market, I think we are in a broader downtrend. We made a counter trend bottom late last year, and we've been rallying. Got up just north of 1,300. We're having a hard time right in this range. I suspect we're probably getting this little counter trend rally that we've been in is probably running out of rocket fuel here very, very near term. So we'll have to see what develops. But longer term, I think you're going to see metals substantially lower. If the next threshold to break is 1,000. Beyond that, I think we're going to see the 873 level, which is the 1980 peak. I think we're going to see that tag.
Yeah. Hey, Stan, thanks for joining us, buddy, and we'll see you soon, and we'll have you back on shortly. So thank you very much. Stan Harley, the Stan Harley Stock Market Letters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.